Question number 3E, next question. Consider following information. Securities debenture, face value is 1000, rate of interest is 20%, redemption value is 1000, investors required rate of return 25%, time period is 3 years. You are required to calculate current market price of the security P0 and explain why in this case price of the security is more than face value premium, less than the face value discount, or it is equal to face value. Try to do answer of the question on your own. Please write an answer. Calculation of P0 year 1 to year 3 will have 1000 rupees into 20%, interest income of 200. At the end of the third year, you'll get the redemption value. How much? Rupees 1000. These cash flows will be discounted at 25%. So 1, 2, 3 factor summation is 1.952. That is 0.8 plus 0.64 plus 0.512. Last year factor is 0.512. So 200 into 1.952. So it is 390.4. And last year it is 512. Based on that, so the P0 will be calculated. So it is 902.4. Please write an answer. P0 calculation. Second part of the question. It says that you are required to answer that explain why in this case the price of the security is at discount. That is a question. Everyone answered correctly. That over here there are again two conditions which are satisfied. We can see that in the second part of the question answer can be written like this. Price of the security is at discount because A, redemption value equals to face value, and B, rate of interest is less than investors' required rate of return. As these two conditions are satisfied, so the price of the security will be at discount. Just out of the way, I am asking a question to you. Out of the way, suppose, just I repeat a query from a student that, sir, can we apply a formula like this or not? P0 is equal to A1 divided by I. Because in that case it is 200 divided by 25% and the answer comes to rupees 800. So sir, can we calculate the answer by using this method? That is a query. Giving reply to this question, answer to this question is that no, we cannot. Why? I explain that to you. Remember that basically we understand that say there are two types of securities that we have as far as the debt security is concerned. There are two types of securities that we have. One is redeemable security. I am talking about the debt security. One is a redeemable security and another is irredeemable security. That is the way the two types of securities are there. In case of redeemable security, what happens? That the security is issued for a specific time period only. So during that time period, whatever income that the investor is going to receive, end of year 1, end of year 2, end of year 3, end of year 4, whatever may be the number of years for which the security is issued. During that time period, whatever investor is going to receive, all of them are discounted in present value term, and with that, so the P0 is calculated. If at all it is an existing security, then in that case, whatever the number of years expired so far, ignoring it, we will focus on the remaining number of years, and for those remaining number of years, the cash flows will be computed and it is discounted in present value term to find P0. In case of irredeemable security, your query is correct, my dear. We will apply the formula P0 is equal to A1 divided by I. That is the way we are required to make the calculation of P0. So in this question, we have gone with this method and not this method. So I was just trying to discuss one additional point with you. Just out of the way, I am asking a question to you. Suppose face value of security is rupees 10,000. The security is debenture. Rate of interest is 16%. Time period of issue is 3 years. Redemption value of the security is at 10% discount. Investors' required rate of return is, let us say, 18%. Now with this information, just with the information, I want you to tell me that the price of the security will be equal to 1,000, greater than 1,000, or it will be less than 1,000. Sorry, 10,000. Equal to face value, less than face value, or greater than face value. I want you to answer me this question. All students have given correct answer. That's the price of the security will be a discount. It will be less than 10,000. How we have come to know? We can say something like this, that the rate of interest is less than the required rate of return, plus in addition to that, the security is going to be redeemed also at discount. So logically we have to understand that, say, if at all the redemption value is equal to the face value, then in that case what will be the situation that we have understood. And even if at all the situation is given like this, even in that case we can understand the price of the security will be at discount.